Today's video is all about Celestia, the modular blockchain powering unstoppable apps with full stack control. Today we're going to be doing a deep dive into this project, looking into some of the fundamentals such as the team, the tokenomics, the ecosystem, and the overall value proposition, trying to figure out whether this project has what it takes to make it to our portfolio. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunity. And the question is Celestia an opportunity? Guys, we're going to be doing a deep dive, looking into some of the details here with regards to this project. It is a project that many people have been looking at. We've been following Celestia and its price action for the last little while. Unfortunately, not really in our favor, but again, undervalued scenarios are definitely opportunities that we could take full advantage of. And we're going to be doing a deep dive. We're going to be doing some research, looking into all the little details, and we're going to be using the website as our primary place to be looking for all the information needed to get fundamentally bullish. We're hoping that the team has provided all those little details. And in addition to that, we'll be taking a retail perspective. Obviously, if we want to see mass adoption in this space, we got to get those retailers all involved and interested in these software solutions, and of course making sure that the value propositions that they offer are worth our investment. At the end of the day, that's the major focus. All right, guys, so let's begin. Let's see what's going on here with this website. Let's see what kind of details they offer us. Obviously, we're always looking for all those little details. Pretty good landing page so far. We got a few blog posts here going here. It's pretty good. Noble, Converge, Hibachi, Abstract, a few good little introductions to what they got going on. Celestia underneath, unstoppable apps. So the underneath concept is basically understanding that Celestia could be part of a lot of L1's, L2's tech stack. Okay, this is super important, understanding that Celestia itself is not an L1 or an L2 or anything like that. It's like an addition. It's meant to help scale. And we'll talk about the tech as best as we can. Obviously, this is not necessarily a tech review. It is a token review, right? Looking at all the little details, tokenomics and all of that. So we'll do our best to talk about the tech as much as possible. But sometimes when we get too deep, what happens is you start to need a degree in computer science to really understand what's really going on. So we'll do our best to touch upon the value proposition. So unstoppable apps, send money like a meme, craft on-chain worlds, or deploy programs that outlive you. Quite interesting statement there. Celestia powers apps that work in every corner of the planet. Okay, that's pretty good. Full stack control. This is where things should look interesting, and they should be able to give us a bit of an idea. Own your product end to end. Customize every layer of the stack without being locked into a single virtual machine or framework. To the modularity that it provides, and this is, I think, that what they're getting into, guys. We have to talk about the modularity behind Celestia because it's the main component, in my opinion, of their value proposition. So we'll talk about all these little things as we go. With Celestia underneath, deploy as your own sovereign network or launch a fast leading Ethereum rollup framework. Again, what is a rollup? Super important to understand based on its value proposition with regards to its data and how it scales data and so on and so forth. On-chain abundance, build excessive applications previously unmanageable on chain. Okay, it's pretty interesting because of the roll-up capabilities. It basically allows you to scale and all that kind of things, which basically leads to its data capabilities. Its data capabilities are a big part of its value proposition. Let's continue going on. Run a light node, use Celestia, go modular. Interesting stuff there. Yeah, explore the ecosystem. It's a young ecosystem, and of course they're looking at cross-chain capabilities, which means that Celestia can be applied to many L1s and many virtual machines, which means that it can be applied to scale any project pretty much out there, which is a huge opportunity, of course. And we'll talk about that now going forward. No worries. And then that concludes the website. So there's a few things that we gotta touch upon and kind of look at, obviously, their documentation and so on and so forth. So let's begin. That's the website. Overall, pretty good. Let's see what we got. What is Celestia? So there's a bit of a table of contents, which is very nice. Learning material is always great if you want to onboard bullishness. What is Celestia? Why Celestia? And so on and so forth. It's a modular blockchain powering unstoppable applications. Okay, the modular blockchain. Rollups and L2s use Celestia as a network for publishing and making transaction data available for anyone to download. What's interesting here is that when you're talking about modularity, you're talking about parts that are able to become specialized. Okay, and when you're talking about modular programming, or anything like that, the reality is modularity separates functionality. Okay, and when you separate functionality, it allows you to cause each part to be more specific and more tailored, more quality, more focused. And that's a big part of what they're offering here, is that modularity and focusing, making one of those modular components focus on data availability. And you can see this word here, for anyone to download, which means that the data that they are able to harness here on Celestia can be something that eventually maybe becomes commoditized, right? Or even, monetized. And that's very important because it could be part of its value proposition even going forward, right? If we're able to have data being stored on a blockchain, which we know, and we can use the roll-up technology to enhance the amount of data that we can store on chain, and if Celestia becomes a very big part of a lot of the scalability use cases, then Celestia is going to be able to collect a lot of data, and we know that data is super important, particularly on chain data. And if data becomes that more valuable, then there's definitely an opportunity to monetize off of it. So this is super important. Good stuff here so far with a few sentences. And by making the blockchain stack modular, anyone can launch their own blockchain without needing a validator set. Okay, so obviously you can launch your own blockchain using the Celestia boilerplate, which is obviously very useful. Deploy fast, use any virtual machine pretty much out there, even Solana, which is pretty interesting. Access abundant throughput, unlock dynamic throughput that scales with the number of users. Interesting stuff there. Obviously very techy. What is the data availability and why does it matter? Okay, so this is important because it really gives you the idea that Celestia's focus is data availability. And obviously, I'm not going to get too deep here, but we have to understand that based on its modular approach, it's able to enhance the capabilities with regards to data availability on its tech, right? Basically, collecting data. And now what data available sampling, you can see a lot more tech here. Data availability sampling, the DAS, you'll see this very significantly across any documentation that they may provide, any white papers. You'll see that this is a topic. Importantly, DAS allows Celestia to scale with the number of users, the scalability with regards to data. We have to understand that blockchains offer different layers, and this is what I really want to talk about here for a second. The monolithic approach, which is something that most of us really understand. It's a blockchain that does everything. It's all under one roof, okay? And as I show you the components, you'll probably make a lot more sense. Monolithic chains execute, settle, and have consensus mechanisms and make data available all on the same blockchain. With the modular approach, you can see that they separate execution, settlement, and consensus and the data availability. And that way, the modular approach allows the blockchain that is associated to each of these modules or these layers to specialize in execution, to specialize in settlement, to specialize in data availability. And in this case, Celestia does focus on enhancing its scalability value proposition right into this layer right here using blobs. Okay, so this is also a big term that they use, and it's, basically it means storage space, in other words, okay, to keep things quite simple. Storage space, the more you pay, the more you're able to store on these blobs, and ultimately the more data that is collected through Celestia. Celestia has data to give to the basically to provide, and that, you know, how data is so valuable nowadays, super valuable, especially in the blockchain space. And you can see that that's where we're at, right? We're very used to the monolithic approach where L1s do everything, but this is the modular layer. Now we see this modularness across this space picking up in the last year. It's not Celestia that started it per se. There's a lot of other projects that have taken this approach, and it's definitely an interesting approach, right? Because it gives you a lot of flexibility, and as far as you know, cross-chain capabilities as well, it's definitely there. So it's going where all the need is, and the need is for scalability. Now when we talk about scalability, we significantly talk about Ethereum, especially with the Ethereum virtual machine, and then we talk about L2s. L2s had that purpose, is to basically scale Ethereum, but then again, then we start to look at the data concept. And Celestia, that's where Celestia comes in. And Celestia can be used, you know, directly on Ethereum, on L2s, on Solana, because all it focuses on is creating a positive environment where the scalability of data is improved. And because of this, it doesn't matter on what virtual machine you deploy it on or you use it on, which is quite interesting. Okay, so as we continue going on, you can see that monolithic are very general, and modular approach can be very specific because you can tailor the layers specifically for your use case. Why is modular an improvement? You know that modular blockchains are now, but how do they improve the difficulties that other blockchains face? Well, you can see build whatever you want. Modular chains let apps cheap to use. Modular chains let you create open access for all. And there's a lot of good aspects right here with modular blockchain. So why I'm focusing significantly here on modularness is because Celestia is taking this modularness and actually putting it into play, and actually giving a use case for monetization for the future. So for me, this is quite interesting. Let's continue. If we start looking at its ecosystem, there is an ecosystem already. We can see that there are some apps. They're not major, let's say, isolated applications that are native to Celestia. There's not a lot of them. But however, because of its cross-chain capabilities, we do see a lot of implementation. And that is the case here, because we know that Celestia is not an L1 or an L2 per se. It is there to help scale all other chains, focusing on data. That's basically where we're at right now. Okay, so that's pretty good. It's ecosystem is there. It seems very young. You know, it does have a lot of integration to other you know, common wallets like Cowper Wallet and so on. We do see some other Cartesi, some other applications, ZK, Dojo. It is a ZK rollup, by the way. Rollup technology is very interesting. If you really want to know more about rollup, I highly suggest that you look into it, because it's a technique that allows a blockchain to save data under one big, let's say, storage spot, right? Just accumulating multiple data that belongs to many transactions under one roof per se, and then that way you're able to store more data on the blockchain, scaling up in that way. Now they do have a white paper, a typical paper that has a lot of information with regards to the tech. I'm not going to get into detail here, because if I do this deep dive is going to be very long. And then, as I mentioned before, this is not a deep dive directly associated to the tech. It's got to be a little bit of tokenomics. We got to talk about the team. We got to talk about many other aspects. But I highly encourage, if you're interested in the tech and the engineering behind it, that you take a look at what this means and how it helps you understand its value proposition. But this is what I like best. You know, usually these Git books are usually great places to get, you know, some good information. The introduction. Okay, so we talked about a lot of this. There's going to be a bit of repetition here, but maybe through repetition there might be a different way for me to say things so that we can really gain clarity here. The Celestia Modular Data Availability Network, that's what it's called, that securely scales with the number of users, making it easy for anyone to launch its own blockchain. So it is a modular blockchain, decoupling execution from consensus. because it's modular, it can separate its execution from consensus, which makes it able to specialize in primitive and data availability, which again focus on data. The former entails that Celestia is only responsible for ordering transactions and guaranteeing their data availability. Everything else does not necessarily matter. Everything else is done on other layers, on other blockchains. So it only focuses on the data availability. This is similar to reducing consensus to atomic broadcast. Let's not get into that, but essentially that's what it is. Okay, focusing and specializing on data availability and scaling that data availability. The latter provides efficient solution to the data availability by only requiring resources limited light nodes to sample a small number of random shares from each block to verify data availability. So it found a way to make it efficient, to couple up a lot of data transactions into one pool that they call blobs, and ultimately those blobs allow the blockchain to hold more data and scale the data. Pretty interesting. Now, it does talk about monolithic and modular blockchains and the differences and similarities. We talked about this. I'm not going to go into it much more. Guys, go check it out if you want to reread this and reanalyze and redo it. It does talk about the rollups, to use the same settlement and DA layers. So the rollups is interesting, no doubt. And, rollups are not new. They've been hanging around for a while. The data availability layer, you can see Celestia data. This is the layer. They talk about how it works, the DAS, and so on. Again, guys, you can see we're starting to get it with the math and the two-dimensional arrays that it uses in order to make those blobs happen. And if you don't know what two-dimensional arrays, it's basically a data set, and essentially it allows you to, increase the amount of holding memory cells within a unit of data, in this case a blob, which is interesting. Okay, obviously their engineering is tailored towards maximizing space, memory. Life cycle of Celestia, app transactions, pruning, data availability, lots of extra good stuff here. Now, if we get right into the overview of Celestia, it kind of gets into the tokenomics a little bit, which we should talk about. Okay, so we touched on a bit of the tech there, and hopefully I didn't rush it, but I think we did good enough there. Now, if we start looking at the tokenomics, we can see that at Genesis, total supply at Genesis, billion tokens. That's that. We're going to talk about how this applies, because really at face value it doesn't really matter, but when we start looking at its max supply and its tokenomics, things start to become more clear. Inflation schedule, it's in 8% in the first year and slowly decreasing over time, eventually hitting like a floor at about 1.5% annually, which is a lot more better, which means at the beginning you're going to have a lot more inflation, but later on it's going to taper down, chilling out. Guys, that's their schedule. That's what they decided to do. And nonetheless, where are we with this today? And there's a couple of things that we got to discuss, and we're definitely gonna pick apart, because things a little bit issue. There's a bit of interest here with regards to tokenomics, and the tokenomics could definitely explain why the price hasn't been so strong in the last little while. So paying for blob space. So blobs, like I mentioned, is the unit of measurement that they use basically to store information. So Celestia's native asset, so the TIA token, is an essential part of the developers build on the first modular blockchain network. To use Celestia for data availability, roll-up developers submit pay-for-blob transactions on the network for a fee. So that's the way they're able to generate some sort of cash flow, let's say. Okay, so that's pretty good. So transaction fees, and obviously that revenue eventually either burnt or whatever the case may be, but at the current moment holders are earning this revenue. Okay, so stakers, holders, and so on, they have a redistribution mechanism, in this case to reward holders. Bootstrap new rollups, that's something that can be done. So a core part of the Celestia vision is that deploying a blockchain should be as easy as deploying a smart contract. Smart contracts are only necessary when you are technically deploying a token, right? In this case, what they want to make easy is deploying an actual chain. In the modular era, developers no longer need to issue a token to launch their own blockchains. This is where they're trying to push to make the L1 more attainable. I'm interested. I'm interested to see. It's quite interesting use case and use of technology and so on. Proof of stake, decentralized governance. So Celestia, they do have a DAO, they do have decentralized governance. Staking allows the community to play a critical role in the decentralized governance over key parts of Celestia. So in this case, you're going to get rewarded for, being a token holder through governance and proposals and community pools, which receives 2% of the block rewards. So as you get those fees, like I mentioned before, they're going to receive a certain percentage, and based on the fact that they have a DAO, there's governance. You have to expect that tokenomics may change, based on a proposal or two. Right, so when you're talking about a DAO and a decentralized organization, a lot of the details can change over time, but you have to remain, you know, faithful that ultimately the token holders are the ones that are going to vote in favor of whatever decision that is beneficial for the project itself, because it should affect, obviously their holdings. And this is interesting concept, because when you're looking at a project that has a max supply that is unlimited, okay, so which Celestia is. So let's keep on going down. Tia is the display. Okay, just continue going down. Let's see, paying blob space, paying for blob space, staking and governance right here. So you can see that right here. This is the inflation rate over the next few years. We're going to see it decrease until it reaches 1.5%. The annual provisions, as you can see, is right here. But I really want to get into the governance a little bit. The community pool, 2%. We talked that already, and you can see the allocation at Genesis. What's super important to understand, because again, this could change after Genesis based on proposals and so on. So super important. But once you start looking at these tokenomics, you can see that a good portion of these tokens are allocated to core or early investors, which kind of bother me. And this is again something that should be bothersome based on a lot of newer projects that are entering this space. Okay, a lot of new projects entering this space come up with these types of tokenomics, where it's expected within the first cycle that a lot of those token holders in the first cycle are early stakeholders, and eventually during a bear market they're going to want to get paid. So if you start looking at it, initial core contributors 17.64%, early backers again 15.9%. These two pretty much are the same. Early backers series, I don't care if they're series A, B, C, all the way 1, 2, 3 to Z. It doesn't matter. Ultimately, the word early means that these people have an allocation that are earlier than the majority, and that is your competition for being basically dumped on. Now, I'm not saying that this is a negative thing, because that means we would never be bullish on any new projects. I'm just saying that the risk of dilution, especially when we start to see fresh capital enter this space, is very risky. And you can see that because it represents the majority of this pie chart right here. Research and development and ecosystem is controlled by the foundation. And the foundation at this current moment is controlled by the team. And this is a big big issue, because then again we're putting a little bit of faith-based systems in that the team is going to be doing the right thing. Is the team a great team? It's a good team. We'll talk about the team in a minute. Public allocation, and this is where it goes to the general public. You can see the Genesis drop was about 7.4%, which means that those are already in circulation. Bonus. And then the future initiatives about 13%. This is a public allocation. Who's going to make the decisions on where those allocations are going to be placed? This is where things start to become a little bit uncertain to me. Which portion of all of this is going to be backed or governed by the DAO? Okay, so all very interesting concepts. Now let's continue going down, because over here you can see that there's interesting details. Full public allocation. So this is early future initiatives, again 20%, and you can see the protocol maintenance development programs for roll-up developers, infrastructure, node operators, research and development. This is basically the foundation is going to be controlling this. That's a significant amount of tokens for a foundation to be holding. And again, I don't see any details with regards to decentralized governance in this case. Our early supporters of Celestia, again, look at all this pressure that we're getting for dilution. There's a lot of it. I'll give you exact numbers. I think it's about 53% of the tokens will eventually become sell pressure over time. Obviously, we use a vesting schedule to kind of like simmer that down over time, so we're not going to see a bunch of dilution. But nonetheless, guys, that's going to be the key. Even if it takes 10 years, it's going to be 10 years of these individuals getting unlocks and getting paid and putting and selling at moments of where they are in profit. And usually that's in a bull run, altcoin seasons. And if that happens in the next little while, guys, I'll tell you this: projects that have a heavy early stakeholders are going to dump. Those projects are going to retrace heavily back to 90% retracements. And like we've seen every other cycle, the ones that are completely in distribution are not going to dump as hard. And this is typical supply and demand. Okay, so just take a look at the unlocks. We can see that over time we do see an increase. As you can see, as these start to become part of the distribution, we get a lot of tokens getting entered in circulation. Okay, so year 0, 1, 2, 3, right around year 4, that's when we start to simmer down a little bit, and the token distribution comes down, gets a little bit flatter and maybe a little bit more healthier. So that's that. You can see remaining 75% unlocks continuous from 1 to 4 years. You can see that. So about 4 to 5 years, they should be simmering down completely. And until then, we're going to have that risk of dilution. So maybe by next cycle, we'll have a lot more of the tokens out there in circulation. And as long as wallet distribution is not so concentrated, we should be okay. Okay, but again, the project is good. It's just that early stages of all tokenomics are usually pretty poor, because they're in the release phase. They're in this phase of issuing tokens to the market, and that's where things get a little bit hectic. Okay, so how to stake, staker, this, that, tutorials, lots of good educational components here. If you want to learn about more about modular blockchains and so on, lots of good stuff here. Okay, so let's continue. I got this. We talked about tokenomics. This thing right here, the lazy ledger. It was an approach. I thought I might talk about this because it's an approach that they invented, or they try to push forward, which basically says that the blockchain is simplified in such a way that when a blockchain only focuses on one particular function, the rest of it can be up to the responsibility of other aspects of the project or of the tech stack. So in this case, there's for example, blockchain is optimized for solely ordering and guaranteeing the availability of transaction data. The rest of it, the rest of responsibility for executing and validating transactions, is shifted to only the clients that have an interest in specific transactions, to blockchain applications that they use. So basically, they're giving the responsibility to the developers of the rest of the tech stack to do their own thing, and not being so controlling, and being a little bit more free about how the whole tech stack comes together, because they only focus on one thing in their modular approach to focusing on data. That's all it is, data availability. So interesting there. They do have a bit of a roadmap. Okay, let's talk about the roadmap. I'll be clear about this. The last roadmap they deployed here is September 5th, 2024. It's quite old. It's not new. Okay, so it's a little old. It's outdated. However, there has been a little bit of talk that Celestia is a little bit slow moving with regards to its tech development. Okay, and this is a common consensus across the space. Now, they are very academic. They're very high quality. Look, people chirp about a lot of other projects that take a very similar approach, focusing on quality tech and then release, instead of releasing and always fixing bugs and all of that. So you can't hate on it. It's just a strategy. And to be honest, personally speaking, I appreciate the strategy. I appreciate a strategy of, taking your time, doing it right, measuring once, twice, three times, four times, and then cutting, if you get what I mean. And if that takes a little bit more time to release high quality tech, then all the power to Celestia in this case. However, guys, having a roadmap that is a year old, even if you're relying on proposals from a DAO, it doesn't matter. You need to have good communication. And for me, I almost a year old roadmap. And if you haven't tagged any of the details here in this roadmap already within a year, that means you're not doing anything. So what is it? Either you're not doing anything and this is valid, or you're not keeping your roadmap up to date and maybe you should, right? Either way, communication is key. And as an investor, I want to know where you're going. And a roadmap is a great place and a great way of keeping everybody informed as to which direction you are putting your capital, even human capital, financial capital, whatever capital you got, whatever chips you have. We want to know where you're going with things. Okay, so a roadmap needs to be up to date, in my opinion. But their argument is this, or any argument is this, is that, look, if you have a DAO, and I'll tell you, DAOs usually don't have great roadmaps because of this, right? It's all up to governance, right? They have proposals, as you can see. They have various proposals, the roll up, the this, the that. Now, if you kind of move down, I just want to quickly touch, if I can find the word. You know what? I had it up. I was searching it a second ago. As you notice, I closed it. I should have left it. The burn. Okay, so I'm gonna just quickly search it again so that we can see that. Oh, sorry. Now, the burn mechanism, right? It's right here. Oh, sorry, right in front of my face. Sorry. Fee burning. Okay, so the issue is this. Okay, this token has an infinite max supply, which means that the tokens, as many tokens that are needed, can be issued. Unlimited. But as Ethereum and other blockchains that have a similar approach, they need to have a very strong, well-defined burning mechanism. Now, I know I'm going to be critical about this because, as you guys know, with a max supply without a proper burning, there's a bit of an issue because you're going to be inflating and keep on releasing coins after coins after coins without anything pulling them back, and burning them is basically inflation, right? Now, the argument is this. They have a major update coming around the corner, proof of governance, that is going to address that. And you can see the proposal was made September 2024 to get the fee burning going, and it's already almost a year. It's up and coming, guys. We got to wait for it. Who knows when it's going to happen? But ultimately, this is great for the Celestia tech stack, because to have a utility for the token, such as burning in an environment where a max supply is not limited, it's unlimited, is not a good recipe, because you're going to have so much dilution. And I believe that this is one of the reasons why we have seen the Celestia chart not really catch so many bids. The incentive to sell is much higher, given that it's always being inflated. Now, in this case, we could see some major changes similar to what happened to Ethereum. The EIP 1559 on Ethereum caused Ethereum to basically burn based on transaction. Now, if there's a transaction, there's a fee. If there's a fee, it gets burnt. All of it, some of it, who knows what kind of proposal they're going to get through. But ultimately, that's the idea. Now, when there's a lot of transactions, we have a lot more burning. When there's not a lot of transactions, in fact, even Ethereum is inflationary when there's not a lot of transactions. So we got to really see where Celestia goes with this. The long story short is that currently Celestia does not have a burning mechanism to counterbalance the inflation that it has. Its focus right now is to release all revenue, or all earning basically rewards are going to be rewarded essentially, and basically given to holders, and that's great at the current moment. But there's massive amounts of inflation. Okay, and that's my opinion, one of the reasons why we've seen the chart look kind of miserable in the last little while. But again, up and up, guys. We could definitely see some good stuff. You can see their roadmap is here. The Celestia community roadmap is giving us an idea of where they're going. However, just look at the dates, right? September 2024, and then we jump to June. Okay, and that's a huge gap, and I don't know where they're going with things. And again, at least they got this, and maybe that's what they got, guys. We got to judge what it is. The roadmap is there, it's clear, it's community driven. Bonus. Okay, so let's quickly get into some more of those tokenomics. I want to just show you, because I should have showed you this first, but all good. They have their clear vesting schedule. These were already issued at TGE. So when the token generation event happened, the futures initiatives and Genesis drop already happened. So a few tokens already in distribution. And even here with these, as they got, their cliff, essentially, they're slowly getting the release. And you can see bit by bit, they're getting that happening. So there's lots of tokens being unlocked in the next little while. You can see that their emissions percentage is right here. Little by little, we're getting, it's not a lot, but it's going to be slow and steady consistently. I think it's a daily unlock, if I'm not mistaken. Let's see. Yes, July 29th, 30th, every day there's a few tokens, $1.93 million dollars worth being released every single day without a burn. Oh, guys, that's a bit of an issue in my opinion. And again, you got, some good data here on their scanner. On the looking at their validators, they got a bunch of validators, which is good. You got there's some stats happening here. Let's take a look. You can see, I was looking at some of the stats, and I was looking at the transactions in the last 7 days, definitely coming down. And I was looking at the fees coming down. I was looking at gas prices coming down. That means, what's happening. Congestion is coming down. Not many people using it, and that's usually led by the transactional volume coming down. But it's only the last 7 days. Could we increase the days? Let's see if we can quickly change this to something that's a little bit more, not 7 days, maybe a month, 30 days. Let's see, 31 days. Okay, pretty sideways, still down, pretty sideways, choppy, choppy, choppy type of scenario. We're waiting for the markets to wake up, including Ethereum, Celestia. Celestia, at the end of the day, you can see even the last 30 days, there's nothing much happening here. Unfortunately, this is their data. You can see transactions are actually down almost 11% in the last 31 days. Guys, what can I say? And you saw the last 7 days also down. So what's going on, Celestia? We got to get more ecosystem growth and more, so that there's more transaction, more use case, more utility, and there's a lot more work that needs to be done. Obviously, we know Celestia is new; it's new to the space, so there's a little bit more improvements, and that's normal. You're not buying overvalued; you're potentially buying in undervalued scenarios here. As they progress, you're going to expect that maybe the price will reflect its upgrades, right? Let's take a look at the team here for a second, because I think the team is pretty interesting as well. A lot of good, interesting stuff here. Pretty large team, 48 associates that they have listed here on LinkedIn. I don't know if it's all of them, but good news is they're doxed. The core team, meaning CEOs, are all doxed, which is great. So we'll jump right into that and see what we got going on here with regards to talent. We got this too, Ismail, co-founder and CTO at Celestia Labs. Pretty cool to see that we got a completely doxed information here. Senior software engineer. Do I need to say more? Freelance. Okay, that's pretty good. And then some other senior software engineer, senior evaluation expert, education, University of Bonn, master's diploma, mathematics, computer science. Very, very well qualified. Okay, so that's that, and he founded, Celestia. Pretty interesting. Do I see any other blockchain particularly? Nothing really, other than being a complete engineer, software engineer. Pretty good though. That's what we need. We need that, software engineer talent. And as we go down, we have Mustafa here, another CEO, founder at Celestia Labs. I'm not sure what that is. An advisor, secure trading, co-founder and researcher. Chain Space acquired by Facebook. Interesting. Software engineer intern. So he does have some experience here, no doubt. I feel like there's some gaps. I feel like there's maybe more that he's not saying, particularly advises in the areas of information security and distributed ledger technology. That's pretty cool to see, because this is a very big part of what Celestia does. Information security, pretty interesting there. So so far, check marks all over the place. University College of London, interesting stuff. And then another individual that I couldn't find on LinkedIn, but I was able to find a bit of a profile. His name is Nick White, and he's very out there on the socials. In fact, he has interviews on YouTube and so on. I would go check him out, but He's the chief operating officer at Celestia, a company that represents a paradigm shift of blockchain architecture. So the modular blockchain. He's a co-founder of Harmony Protocol. So he's not new to this space. This is actually quite bullish because he has some experience within a protocol that we're quite common. We know what it is, and we've seen what it has achieved, and it's done very well. Building scalable blockchain infrastructure. Okay, so interesting. Before that, Nick worked as a senior AI specialist at Zeroth AI, focusing on accelerating AI startups in Asia. Master degrees of science and Bachelor of Science, electrical engineering at Stanford. Beast. Okay, so here we are. We got three names here to Celestia, and that's all we really need because we see a lot of good capabilities here. Got lots of good talent, large team, 48 members, and I don't even think I did it justice to kind of even go through all of them, but we do have some others, right? You can see general counsel. Okay, we got some lawyers, and we got advisors, lots of advisors happening. Blockchain engineer at Celestia, another engineer, CEO, co-founder at another blockchain something solution engineers. Guys, there's lots of talent here. So the team for me is pretty solid. To be honest, really, really solid, large, lots of good talent, good stuff there. Now let's continue going on. I wanted to look at here their socials a little bit. We can see that they do have a blog, but their blog is not really being used too much. May 19th, April 14th, February 17th. Maybe it's a once a month type of thing. It could be, but not even, because it should be a little bit more. November 21st, that's the last one. Right into here on May 19th, and we're already in July. It's a bit not being manned. It looks abandoned a little bit. Their X. This is something that's been trending or has been floating around the last little while. I just might as well touch upon this. This is a story that was released recently. The Celestia Foundation has worked with Polychain Capital to assign Polychain's entire remaining TIA holdings to new investors. So Polychain's entire holdings has to be reallocated to another investor. This month, the foundation purchased a bunch of Celestia from Polychain Capital for $62 million, which shortly been undelegated their entire staked Celestia holdings in order to settle the transaction. So those tokens are up in the air. To ensure neutral impact to the foundation's financial position, the foundation is finalizing the assignment of the tokens to new investors. Who are they? We don't know. Transactions will be rolling unlock schedule, with the first unlock starting the 16th of August, completing on 14th of November. So, guys, how does this going to impact? We don't know. I think this is something that we need to follow strictly. Is it going to continue causing more sell pressure? It could be. What can I say, guys? This is the wild, wild west of crypto. Let's continue going down. We do see 400,000 followers here on X, which is great. It's not bad. They got a decent community. And if we keep on going down, they got some good engagement here. Let's see their last pinned post right here. 1,000 likes, 300 retweets, reposts, pretty good. And then the rest of them, given that this one has been out there for 21 hours, it's not bad. 100 likes for repost, 80 likes, 10 reposts, and so on. So for 400,000 subscribers, you would expect a little bit more. This one's pretty healthy, but this one's the one that I just read out to you. It's a very important one, so maybe that's why I got a little bit more traction. But generally speaking, guys, we need to have a little bit more. This is not enough given 400,000 subscribers. We know that this space has been a bit quiet, and a lot of people have been leaving, not really even focusing on crypto in the last little bit, and that could definitely be one of the reasons why we're not getting that much engagement. Okay, so that's that, guys, overall. Let's take a look at some of this price action. Actually, before we do that, as you know, guys, I do have a summary, a infographic that I release to you guys every single week, and I'm gonna post it all over the socials, so be prepared for that one. So let's check it out. It's this right here. It's an overview, a quick cheat sheet on what Celestia is all about. So let's begin and see what's going on here with the ecosystem. They got the roll-up ecosystem with different roll-ups already in existence, which is good, such as Dimension, Astria, Eclipse, Movement Labs. If you guys know what Move is, of course, they have something going on there. Dev tools and framework with there's other developer tools that I decided to leave out because it would be too much info, and obviously it could definitely be other big ones, but these are common, right? Because if you look at as a layer 2 scaling solution, as providing roll up capabilities, OP Stack, Arbitrum, Orbit, Polygon, CDK. These are the most common layer 2s out there. And there's toolkits readily available for these frameworks. And because of that, there's no reason why OP and Arbitrum and Polygon can't use Celestia as a scaling solution for their data availability. Right, this is their value proposition. Bridging and interoperability, IBC. So Cosmos, it's built on Cosmos, so which means that their interoperability gets improved here. And there's other because it's not relatable. It's a modular blockchain or a modular approach. Really, it doesn't matter about where the projects are built that they're scaling. They could be scaling a Solana EVM virtual machine, a Solana VM project, and still use the Celestia tech capabilities. That for me is great. So their ecosystem can grow exponentially based on this cross chain or this chain agnostic approach. Unfortunately, I'm not seeing too much here yet. So ecosystem growth definitely needs to be there. And again, I think a lot of people, especially right now, are focusing on still this Ethereum based scalability. And what does Celestia offer? Because other L1s don't need so much scalability. They're not really focusing. When do you ever hear that Solana needs a scalability solution? Right? In this case, we know that Ethereum needs a scalability solution, and even so, if it supports the L2s because of its association to Ethereum, then maybe there's a value proposition there, and maybe that's where Celestia finds its first mover advantage. But then again, how many people are bullish on L2s nowadays? Right? Are L2s themselves band-aid solutions to Ethereum? Ethereum itself could update and never need an L2 ever again. And then what happens to Celestia? So this is a bit of an issue because Celestia's primary objective is to scale, assuming that these L1s can't scale themselves eventually in a modular way. And then what happens to Celestia? So my major concern is Celestia another band-aid solution, right? Again, guys, I'm going off the rails a little bit here, but I'm trying to keep open minded because, of course, that's the way you do deep dives. You talk about the good, the bad, and the ugly, and whatever comes to mind, just to throw it out there as conversation. Feel free to let me know what you think in the comment section below, because that's the way we can find holes in your thesis, whether it be bearish or bullish, it doesn't matter. Utility. At the end of the day, we see lots of good capabilities here. Paying for blob space. I'm talking about the token utility, not Celestia in itself, because it's still kind of working through things. Paying for blob space, that's what you can use the token for. So the fees, staking to secure the network, and governance. Right now, that's all it's really got going on. And even that, it's still very, very slow and steady. Nothing really major. Because one of the reasons why they don't even have a burning mechanism is because they're not even really earning anything yet. The burn. And that's one of the reasons why they're not focusing on burning. Okay, so you can understand without utility, there's no revenue. Without no revenue, there's no need for burning. And if there's no burning, it's with a max supply, unlimited supply, things just kind of boil and don't kind of like go out of sync a little bit. Roadmap, proof of governance is currently in the works. Great, we need this because it's going to entail a lot of good updates for Celestia, and a lot of people are super bullish on these updates. So good stuff. We hope all the best. Roadmap is outdated. The official roadmap that's there, you saw September 5th, 2024. It's almost a year old. Come on, let's get things going. Community roadmap is running and looking great. At least you get some details there. But ultimately, in addition, we see a lot of gaps in that community roadmap. Maybe it's just really worry that Celestia is taking too long to get things going, and that's one of the criticisms across the space, that Celestia is focused more on it's academia and making it perfect, and not really putting things out there and like creating things and releasing tech. And that's their approach. We can think of many L1s or many projects out there that took that approach, but their tech is great and solid. The team, fully doxed, large team. Okay, fully doxed is great and it's large. Founders are academically credible and research heavy. Again, we mean research heavy and focuses on academia quite a bit. Is generally a recipe for non-releasing tech fast, but quality. Okay, so you got to choose which camp you're on. Public engagement, active. Within technical circles and hackathons, which is great. I give the team 9 out of 10. They look great. Everything that I looked into, very positive, young, large, good stuff there. Social, 8 out of 10. 400K X subs with below average engagement for its size. Unfortunate. I expected a little bit more, and there's metrics out there to suggest that for 400,000 subscribers, they should have a little bit more engagement. Discord and Telegram is active, great, a good amount of engagement considering where we are in this space. Blog should be kept up to date or used more, or not used at all. Remove it because it looks like it's abandoned, unfortunately. So 8 out of 10 for the socials, and 6 out of 10 for tokenomics. It's just plainly as it is, guys. The seed, the series, the core represent, give or take, 53% of the supply. Way too much dilution is at risk here. And I'm not saying that Celestia cannot pump based on this fact, that supply or demand will not outperform supply during a specific period of a market cycle. And that is called an altcoin season. Right, during an altcoin season, it doesn't matter about these tokenomics of unlocks and all that. If the FOMO, the demand will peak, it will run within a temporary moment, and as soon as that's done, and all these early stakeholders that are you see here, they will take profit, and the project price will retrace 90%. We've seen that cycle after cycle because of this. Okay, so appreciate the gains in the short term, but I wouldn't be holding this multi-cycle, especially holding without expecting a complete retracement. Okay, total supply can inflate indefinitely because of the max supply that I told you about. We need that burn mechanism, is not implemented but in the works. So we're still hopeful. We're waiting. At the current snapshot, the tokenomics don't look very well. Okay, so that's my opinion. 6 out of 10. Relationships, pretty good. We got some good ones. You got Binance Labs involved, Placeholder, Delphi Digital. We know these are big ones, so good stuff there. L1 and L2 order book data. We have Caper Ryle. Hopefully, I'm pronouncing that right. We have Nansen and we have Keiko. These are all important non-blockchain, non-crypto, or non-token projects. These are just regular Web 2 projects, okay, that are going to be using or are using Celestia data. So remember how we talked about how Celestia eventually could monetize their data. Remember, we're talking about data availability here. And based on that, they're able to monetize it and earn off of it. And potentially because of that earning, obviously, burn, and by that word, we know that token holders will get rewarded, right? That's the end game based on burning. Now we have to understand that this right here, the Capro, for example, order book data, Nansen, wallet level intelligence data. Keiko offers historical and real time trade and liquidity data. So we're seeing that, basically that Celestia, if you look at it, it boil it down to what it really is offering, is it's offering the ability to sell data based on blockchain transactions, on-chain data. And because it is chain agnostic in the sense that it's not an L1 or an L2, and it's not specific to any layer 1 solution, it's a solution for all blockchains. The reality is that it could collect a lot of data from various parts of the space, and it could be very lucrative opportunity. Now, because of these relationships and potential application, 10 out of 10. Now I'm going to be waiting to see where this goes forward bit by bit. Tons of liquidity here, lots of depth. Gate, Binance, KuCoin, Mexi, Bybit, Coinbase, BitGet, much more. 10 out of 10. I wouldn't be holding my breath for any other exchange listings, guys. It's all over the place. It's very liquid. It's got all kinds of liquidity out there, well known. In my opinion, Celestia is an interesting project. It's very, very interesting, but there's some things that need to be worked. And some may argue, including myself, that it's overvalued, at its current level. As soon as it gets some of these updates going, some of these tokenomics fixed, and maybe a cycle behind it, it might be really good, and more use case and more utility might be really good. But then again, it might not be at this market cap. Maybe it is good value, because we do see that a good portion of the total supply is already out there. Okay, max supply is an infinite, but the total supply is 1.13 billion units. And at the end of the day, we see that the current circulating supply is 722 million. So we have a good portion of them already out there, guys. So we have to understand that ultimately, yes, there's risk of dilution, and that's the case. But as soon as they can tweak some of these details with regards to tokenomics, it might be a little bit, looking good for Celestia going forward. Okay, so that's that. Let's talk about a few more little details here. And again, just a reminder, guys, I'm going to be posting this all over the social, so you guys can take sneak peeks at it as you go by. I find them very useful, especially if I want to refresh my memory on certain things on various projects. It's a modular blockchain, data availability, roll up on Ethereum and other blockchains, scaling solution. Okay, maybe I should have been more clear about that. Okay, so this is what it basically it is. Supports EVM, SVM, Solana Virtual Machine, Move, and any other custom virtual machine. It's very chain agnostic because it's not related to a chain per se. It's meant to help scale, and because of its modular approach, it can achieve that. Annual decay from 8% to 1.5%. Eventually, that's going to happen. It's going to take some time, but eventually will happen. It will it started off at 8% and it will reduce by 10% every year until it reaches a floor price of 1.5. Seed contributor investor unlocks over the next 2 to 4 years, reducing supply shock, which means in the next 2 to 4 years you will have some supply shock, and we talked about that. It's front heavy. And I think that by next cycle, we'll have a lot more tokens already unlocked and we won't have to worry about it. It's this cycle that we may have to worry about. So, in my opinion, again, not financial advice, is that this thing should not be a multi cycle hold. It should be try to take your profit and reaccumulate during the bear market and then see what happens, because after all the tokens get released, then things start to look a little bit better. 20% of the supply distributed at Genesis. That's bullish, right? That's good. That's how we can get a lot of tokens out there and not worry about dilution. Transparent and clear vesting schedule. Obviously, communication is key. 26.8% is controlled by the foundation. And that means that the foundation, 26% is centralized. They can call shots on anything that they want to call on with that 26%. Now, is it going to ever be part of the governance? Is it going to be ever part of the DAO? Are they going to relinquish some of this? Or is, it's a lot, guys. That's all I got to say. I would like to know a little bit more about that, but it's a lot, 20 to almost 27% for the foundation. It's significant. Proof of governance will introduce more utility, and obviously the burn mechanism is on the roadmap. Based on that, guys, bullish. That's what we need. I'm going to keep my eyes and ears open on this, because once this happens, an update is definitely viable, and then we might see some good stuff here for Celestia. Lazy Ledger proposed removing execution entirely and focusing only on consensus and data availability. Lots of liquidity and depth within the market. Good stuff here for Celestia. Some interesting things. Some things I'm concerned about. But that's the way it goes. And then I start to think, okay, what are the capabilities here as far as market cap? Could it do a 10x? Sure. Why? It might hit $13 billion. Why not? Total market cap with a nice altcoin season, nice run, it could definitely do that. Hit $18. Is that doable? I think it might be too much. I think, based on its utility and what it's got going on, I don't think it's a very interesting enough utility or use case or value proposition that might attract. It doesn't have appeal, doesn't have that sex appeal, sexiness that we need in order to really start deploying, major capital. And that's my opinion, guys. Of course, maybe yours is different, but if we can get to about $10, I would be, quite pleased to see Celestia reach that level, and that would probably be a 5 to 6x. It could attract more liquidity, could it attract more of that total market cap, maybe. But again, guys, if it hits that level for me, I would be pleased. I give it an 8 out of 10. In fact, maybe that might be a little bit generous, but right around there, 7, 8. Again, guys, I'm not a fortune teller. I don't know where we're going with things, but it does have some good stuff, but it does have some things that it's like, it could be a little bit more. It could be a little bit more interesting. From a tech perspective, it's solid, but it's from its implementation or utility within the Web3 space, it could offer a little bit more. All right, guys, I know you're here to talk about charts as well, so let's take a look at the chart. Let's see what's going on with the Celestia chart. At the end of the day, Celestia, let's get on the daily, has been kind of looking bad. I'll be honest, this is an ugly chart. I like this level. At this level, we were looking pretty good, but then once we got that rally up, this was a level of which we should have reversed, and guess what, guys? We came down for a massive sell-off. Let's take a look at this in a little bit more detail. Now, we know that a lot of blockchains have been suffering. A lot of charts have been suffering, right? But to be honest, Celestia is probably the ugliest chart out there at the current moment, in my opinion. And you can see the sell-off. The dilution without a burning mechanism, any rewards or anything gets, its potential sell pressure. And, you can't dispute it. It's making lower lows and lower highs consistently, regardless of what other market participation or market participants are doing. Celestia continues making lower lows and lower highs. We could think that maybe this is done. Maybe this is a time to see this breakout. And I'll be honest, it does look compelling. It looks great. This could be the moment where we finally see Celestia form a higher low and then break above this high and confirm a higher high and make a beautiful change of character. Guys, all the power to you. And, to be honest, I did mention on the Discord that I'm interested in bidding in this level because it's very possible that that's the case. But as you can see, especially lately, Ethereum has been doing super well. A lot of the market has been super well. I could see Ethereum dipping. And the question is, what happens to Celestia when Ethereum dips? Are we going to see Celestia coming down to a little bit of a low, maybe a double bottom, like I said, maybe hit a golden pocket, maybe a 786, 886, and I can accumulate little by little right into here, and then finally get the confirmed higher high and change the character? That's what I want to see. I want to see a market structure that suggests the price is ready to pivot from bearish lower lows and lower highs to bullish higher highs and higher lows. We see some volume here. That's pretty good. Lots of thick volume right into this level, particularly right into this zone. That's awesome. That's what you want to see. Strong market participation at a level suggests that the market is interested and bidding, but where is the price action? The question is, where is the higher high? Where is the expansion? Where is anything other than a lower low and lower high? So what I'm going to say is this. If you're looking for entries, now's not a bad time, but you got to drop to the 4-hour or the 6-hour and take your chances within the current market structure. And I'm going to tell you this, the current market structure is still showing you a downtrend. So you're taking a ton of risk. And I'm going to ask you one more question. Where is your invalidation? Unfortunately, you have only one place of invalidation, which is down here at these bottoms. And if we break below those bottoms, get yourself very, very defensive, because you don't know how much lower we're going to go. Okay, that's usually what happens. It's like what happened here. You put your horizontal, put your stop loss, and we come down for another extension to the downside. Do we come down for another extension on Celestia and maybe hit the $1 mark? Let's see what happens there. Let's see if we take the swing low to the swing high and we come down to $1. It's the 1.27 extension. That would be a beautiful sweep. Come down to the 1.27 extension, bang, 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 and then start making the reversal. It's a lower low though. That'd be ugly, right? It's not very convincing to anybody. However, a golden pocket retracement, 786, 886, and getting a reversal right here, we make a higher low in comparison to this low. We break the previous high, get a confirmed higher high, and we start calling this a change of character, and we're done. Reversal, in effect, stop losses down here, done, right? That's very possible. Let's take a look at some of these indicators. Let's see what's going on with the indicators. We did get overbought here on the 4-hour. I will quickly want to go on the daily, back to the daily, because we can see that it hasn't even gotten overbought, which means that there's still upside potential to get overbought. I'm seeing the volatility line got fully reset right here on the daily time frame, which means that we could be getting a bullish response any moment to finally see the momentum get overbought. This is an ideal moment to start seeing a daily shift. Now, I really want to be clear about what I mean by that, because a lot of newcomers, when they come in, they see a daily time frame shift and expect it to run right away. It doesn't happen, right? We have to understand that there's intra-daily time frames, the 12-hour, the 6-hour, the 4-hour, that are going to get peaks and valleys along the way before the daily starts to crank. But what we can see is that it hasn't gone overbought, and this green expansion in the background, you see it right into here, that green that I got going on right into here, it's still quite strong. So what I'm starting to look at is, maybe we're dipping here for a quick, move to the downside, and let's see if we can get overbought and see the momentum, the purple line, jump above the 70% mark. That is when we'll see Celestia potentially expand out of its range, and unfortunately the range is a bearish range, one that is downwards trending and creating this downward sloping channel. Now, for me, guys, it's little by little. Momentum oscillators, trend oscillators, they're not tradable. Market structure for me and liquidity is the most important. And as you can see, even this oscillator, EMA is facing down. Let's take a look. See what this looks like. We got red histogram bars. EMA is facing down, and we got, and it looks like it's in a bit of a downtrend. This is a duck face right now. Is it gonna turn bullish and move up again, or is it gonna completely retrace, maybe get down to here, and then finally maybe we start moving up again? Guys, if Ethereum dips, Celestia will dip, and we'll continue looking for that bottom. So that's what I look for, guys. Opportunities when we see Bitcoin frothy, Ethereum a bit frothy, and maybe the rest of the market might dip, but there's no guarantees. There's none whatsoever. So what I would be doing is DCAing all into this area, slow and steady, but just understanding, again, that Celestia, all it has been doing is making lower lows and lower highs. Unfortunate, guys. There's nothing else to say about that. Look at the 4-day. I'll quickly get into higher time frames so we consolidate all of this. Look at that. It doesn't look nice whatsoever. We're just hoping that this becomes a reversal, and it does look like it might be happening very, very soon. Okay, so invalidation, $1.34. If we break below there, guys, defend your initial investment. Take a small loss. Don't be afraid of taking small losses, because that way you can preserve your capital to redeploy and get another setup that has an edge and keep on going. Right now, spot buys only, no leverage. Take it easy. DCA 30-30-40 is a great strategy, 30% at a time, and then slowly you can build that position. And eventually, once we see some good indications that we are reversing, like a change of character, we can get in with more heavy positions. At the current moment, guys, DCA nice and slow. All right, guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip. Thank you.